Hi traders, so this very video is gonna be a complete market structure trading course. Many of you fail to know your bias, fail to know your direction, fail to know your trend. And you don't trade along the market trend, you definitely lose the trade. So in this very video, it's gonna be a complete tutorial on the market structure. How you're able to identify the trend and then trade along the trend. Remember, if you trade along the trend, definitely you will trade along these institutional traders. And that's what every single trader wants to do. So I'm not gonna waste time. Let me jump right into the video. It's a complete course from the very beginner aspect to a point where you start activating trades, taking trade with this. So let me go straight up to my screen. And right here on my screen, I can notice a couple of trades I took. I took all of these trades. Then this one was a loss. I'm going to show you everything. And if you watch what I'm drawing right here, BOS, change of parameter, different zones. This is a sell I'm currently on now, right? So, and this sell was dropped on the free Telegram. The link will be in the description where I dropped the sell. It was a free signal. Notice it when I said I'm expecting this on BTC when the setup was present, and this was when it's activated. Pretty much the link to the Telegram will be in the description of this very video. Market structure is a simple topic in trading, but it's something you want to know in order to start making money, which is the market structure. Now, market structure in bracket is just your trend or your direction. As you know, the trend is always a friend, and you want to do everything possible to make sure you are trading along the trend. So this market structure now is going to show you the trend, show you what you should be doing. You should be looking out to buy or looking out to sell. Now, it's also your direction, where the market is going, your direction where the market is heading. We have three market structures. First one, we have the bullish market structure. That's a bullish structure. Second one, we have the bearish structure. Then the final one, we have the consolidating market or the ranging market, right? The consolidating market. And these three different type of markets, I'm going to draw them out so you can easily see them and then know the different markets. First, the bullish market now is when it's going up. And in a bullish market, you as a trader, you want to make sure you are buying. Right? Bullish market is when it keeps creating. I'm going to show how you know it's bullish or bearish. Then the swing structure, internal structure, and everything. I'm going to show you guys, teach you guys everything. So first, that's a bullish market, showing that it's going up. How do I know the market is bullish? Just simply is going up or is going down. Right, it's going down and it's bearish. It's going up and it's bullish. But there's a way you're gonna know that this is actually going up or this is actually going down. Then the third one, we have the ranging market. Ranging market is just when it keeps moving within a certain support and resistance, just moving within a high and a low without breaking above or breaking below. Just moving within a certain region, moving within a certain box like this. So this is like a ranging market. And this type of market, I don't trade it. I don't trade a ranging market. I only trade either a bullish market, I'm looking out for buys, or a bearish market, and I'm looking out for sales. So a ranging market is not part of what I trade. Now, how do you know a market is bullish or bearish? Right? How do you know the market is bullish or bearish? There are two things you can use to know. There are two main things you can use to know. First one, which is the most common one, and this something you can also use. We have the higher highs and higher lows for bullish markets. Then for bearish market is the lower highs and lower lows for bearish market. Now that's the first way you're able to know your trend. Then the second one is using your BOS. BOS now is a break of structure. So these are two ways you're able to know your direction. You're able to know your structure. You're able to know if this market is bullish or bearish. Now, the first way is when it's creating higher highs and higher lows for bullish market. What that means is very simple. On price getting here, let me mark it out. On price getting here, then going down, getting here, going up, getting here, going down, just like that. This point now was a high, then this was a low. Then the next high it created now was higher than the previous high. That's like a higher high. So this high now was higher, the higher high. This low now was higher, the higher low. So it keeps creating another higher high, another higher low, another higher high, another higher low, showing that it's bullish, and that's the first way you're able to know that the market is bullish. Keep creating the HH as into the upside. This one is creating higher high. This is a high, and the next high now was higher. That's like a higher high, right? It keeps creating higher highs. So with this, I'm able to tell that the market is bullish. Then for it keeps creating higher lows as well. HL, higher lows, keep creating higher lows as it's going up, identifying or showing that this market is actually bullish. With this, you can now tell that the market is bullish because it's creating a higher price, a higher highs. I'm going to show you on the chart. Then let me show you for bearish move, and I go to the chart and I show you. Now for bearish move, now you can notice this was a high, then it was a low. The next low that was created now was a lower price, a lower low. Then this was a lower high, lower than the previous one. This next high now was higher, was lower than the previous high. So it's creating lower highs and lower lows, showing that this market is bearish and it is creating series of lower highs and lower lows. This is like a low, which is like, and it's creating another low, which is a lower low and lower highs. So pretty much this market is bearish. Now, this is not the way I know my direction. This is not the way I personally know my trend. But I use the second one, which is the break of structure. And that's what I'm going to talk about now. So the second way you're able to know your direction, you're able to know your bias, is a break of structure. You're able to know your direction mainly, is a break of structure. This is what a break of structure is. BOS, as in break of structure, is a break, right? A break above, above or below a low or high. You know, a break above a high or a break below a low. A break above a high, literally, or a break below a low. That's what a break of structure is. Now let me show you. Once the price gets to a point, maybe gets to this very high, came down, and then goes up again to break above that high. That's go create a higher high with the higher lows and higher highs I just showed you. This one now is like a high. This one is now like a higher high. Now, what just happened? It broke past that very previous high. So that's what we call break of structure. And I personally use break of structure to mark out my trend, to mark out if it's bullish or bearish. In a bullish market now, definitely it will be breaking structure to the upside. And if I mark out this high, the highest point now drag it forward, this is when the price broke past it. And if I indicate it now, that's a break of structure. Indicates that this market is bullish. And what do you think will happen? The price is going to create this like a higher high now. It's going to create a higher low, come back down. What happens? Goes back up again to break structure. And what happens? Creating another higher price, or obviously it broke structure before creating that higher price. So with the break of structure, I can easily tell the trend. So I personally use the break of structure. I took my time to explain higher highs and higher lows because it's something that the markets do use as well. You can also use to consider it. Now let me go to the price and let's show you. On this very price, now notice what's happening right here. This is like a low, right? And what happened? This is a high. Then the next low now was lower. It's like a lower low. This is like a lower high. Because this high now was lower than the previous high. So this market shows that it's bearish with the lower highs and lower lows, which is this very one. Lower highs and lower lows. Then if you watch right here, obviously it's breaking structure, which that's what I use. Then remember what I said, we have swing structure. So this is a low. What happened? It broke past it. Right? This is a low that the price created right here, and then it broke past that very low. A low, price went up, coming back, then it broke past it. It didn't break to the upside. Now, on coming back up, created this new low, right? What happened? It came back up. On going back up, it didn't break to this upside. It didn't break this high, but rather it went back down to break this very low, showing that this market is still bearish. And if you watch, where is it breaking structure to? It's breaking structure to the downside. So this is a BOS to the downside. Then this is another low, which the price also broke. Another BOS to the downside, showing that this market is bearish. Then what happened? Another low was created right here. Notice it's not breaking any structure to the upside, but rather it's breaking to the downside. At some point, it will break it to the upside, which is going to confirm that it's bullish. Now, once it's creating any of these higher highs and higher low now, what is happening? It's having that high breaking structure to the upside. So I don't consider higher highs and higher lows. I just like to show you guys so you guys should know it, but I don't use it. It's not what I used to know my trend. I just keep marking out all the break of structure that are present right in the market. Now, at a point, the price will reverse. At the point reversal is going to happen, which I'm going to talk about. After I'm done talking about change of pattern, I will now move on to the swing structure. How you know your swing moves, how you use it to determine what you will be doing in the market. Now, this market now at this point now was now bullish. What happened? It started breaking to the upside. This is like a high. What happened? It broke that high as a break of structure to the upside. Then this is another high. It came back up, broke above it. Another high was created, came back up, broke above it. So this market was now bullish at this very point. So it's breaking structure to the upside. So that's what I used to know my direction. Either it's breaking structure to the upside or it's breaking structure to the downside. Now, the second thing I do consider in knowing your trend is the reversal or reversal for you to actually know that it has now changed. It's no longer going to continue going up, it will now likely start going down. That's reversal. And what do I use to reversal? I simply use the change of character. They call it CHOCH. And other traders, you're going to hear them calling it um, market structure shift in bracket as in MSS, right? MSS is the same thing, right? It's just a change for reversal. And that what it shows or what this change of character does is just to show reversal. With this, you're able to now tell that, okay, it's now changing. I was looking out for buys. I will no longer be looking out for buys because that's now like reversal, showing that sellers are the ones now going to step in. They're not the ones stepping in on the market. Now, let me show you. This is a very nice example that's already present right here. Watch. It had this high. What happened? It broke past that very high as a break of structure to the upside. BOS. And what happened? It got this new high. This new high now what happened? It broke structure to the upside. What's that telling you? That this market is bullish. And watch, that is new high. It broke structure to the upside, showing that it was still bullish at that very point. But immediately that happened, after that break of structure to the upside, what started happening? This is a low break of structure to the downside. There's something that happened at that very point that made it start breaking structure to the downside, which now caused a reversal. After that first break to the downside now, what's now happening? More break to the downside. So something happened right here, which is what we call reversal. And what formed was a change of character or market structure shift. So there was a reversal at this very zone, and the market structure shift is going to confirm the reversal for you. Now, a change of character or a market structure shift is the same thing. You just win the price. Now start doing the opposite of what it has been doing, like a reversal. In this case now, it has been creating BOS to the upside, multiple BOS. This was a high. It broke past that very high. That's a break of structure to the upside. So multiple BOS to the upside. Then eventually what happened? It broke past this low for the first time. It's like a break of structure to the downside. Then what happened? If it does that, to now likely start breaking to the downside. It has been breaking to the upside, but now for the first time, it has just broken past this very low as a break of structure to the downside. This first time it's doing it now is a change of character. So we refer to as a change of character or as a market structure shift. Now, it's still a break of structure because it's a low that was broken past. But since it's the first time it's doing it, since it has been going up, it's the first time you're doing it to the downside. That's change of character. Then in the buy case, it has been breaking into the downside. For the first time now it broke to the upside, that's a change of character, signifying that this market is very likely going to start buying if it was going down. Let me show you an example. In this case now, notice price has been breaking to the downside. Notice an example right here. This price has been breaking to the downside. Price at this low, went up, broke past that very low, got here, went up, broke past that very low. What happened? Finally, it came up and broke past this very high. That's like a change of character, confirming that this market is now very likely going to start becoming bullish. If it was still going to continue selling, it won't break past this very high as a change of character, but rather it will get to maybe around here where it's consolidated. That's where it will continue dropping without breaking that very high. But immediately broke that very high now, shows that this market is very likely now bullish. And after that happened, started breaking structure to the upside. Then in this case, notice what happened again. It was breaking to the upside. This is another BOS to the upside right here. And after that BOS to the upside, what happened? It broke to the downside, which was this very low right here. It broke this very low to the downside. And that confirms a change of character. Since it's the first time it's doing it. And what happened? I was looking out for buys, but now I took a sell, which gave me solid 5 RR. I got about 5 RR on this very trade. I dropped this very trade for my students. And before I go on, I have a mentorship class where I teach students how to trade. So if you wish to join my mentorship class, learn how I trade, learn all of these things from me directly. I do live training. There's a link in the description to join. It's about $40 currently. Probably by next year, 2026, I'm going to increase the price. So there's a link in the description to join. Now, at this point as well, this was the first time that it now broke to the downside. It hasn't break to the downside, it has break to the upside, but the first time I just did it, that's what we now call a change of character or market structure shift. Now, not all change of character are valid. You can't just mark out every single change of character as valid. Not all of them are valid, only few are valid. Now, what's going to validate it? What's going to make it valid? There are two things. The very first thing is that it should have a BOS. It's that it should have a break of structure as in a BOS. Then the second thing that's going to make it valid is that it should happen at a key reversal zone, at a key level or key reversal zone for you to actually confirm that, okay, this is actually valid, this is actually going to change the bias, change the move. Now, if it just happen at a random zone, there's a high chance that that's a fake out. That's just a liquidity grab for the buy or the sell to continue. But if it happen at a key reversal zone, that can give you more confidence that this will actually hold. Let's say this case now. Let's say this very case. This was a sell zone. This full zone right here was a good sell zone. And see, this is a river. I'm going to show you examples of that. Now, on getting here, what happened? That was where it gave the change of character because it got to this reversal zone, it got to this sell zone. Now, the very first, like I said, you should have a break of structure. Now, if a change of character is going to be valid, it should first break that high as a break of structure before it breaks the low as a change of character. I mean, if you're going to mark out any change of character, you should have two break of structure like this. Break to the upside and then break to the downside. That's what will validate and then confirm that this change of character is valid. If it doesn't break to the upside before breaking to the downside, or it doesn't break to the downside before breaking to the upside, that's not a valid change of character. Let's say this is an example right here. Let's say this is an example right here. If you watch, this very low was not taken out. This is a low, and the price failed to take out this very low as a break of structure to the downside. But what happened? It went up to break this very high. This is not a valid change of character. Why? Because it has failed to take out that low as a break of structure to the downside. So that's what's going to make a change of character valid or not valid. It doesn't break the structure to the downside. Then the second thing, like I said, it should happen at a key level or at a key reversal zone. Now watch, this zone it started selling from, it was a reversal zone, it was a sell zone. You can notice on getting then I gave a change of character and then it started selling because that was a zone for possible sell. Then watch another one right here. This zone it started buying from, this zone it started giving a change of character from. It was a buy zone. There was a buy zone. I'm gonna show you on the chart. It was a buy zone. That was where it started reversing and gave a change of character at that zone. It didn't just get to a random zone and then give a change of character. Then this zone I took a sell from, it was a sell zone. There was a sell other block around here. That was where it got to. Then gave that change of character. That was where I looked at for sell. Now, that's what the change of character is. And if you watch, this one I'm currently on now. This one I didn't wait for a change of character. I just entered like that. Now, that concludes what market structure is. Now I'm going to talk about swing structures. With what I've given you now, you now know how to know your structure, how to know if it's bullish or bearish using your break of structure. And you now know how to spot reversals. Now, what I'm not going to talk about now is a swing structure. We have what we call swing structures in the market. Now, there are difference. There's difference between the main internal structure and the swing structure. Let me put the other one. The other one is like the internal structure. Then we have a swing structure. They are different. They have difference, right? Now, swing structure is majorly structures or movements on a higher time frame. Right? That's what swing structure is. Higher time frame movement, higher time frame direction, higher time frame bias. Now, if I go to a higher time frame, literally starting from 2 hour, 4 hour daily, those are the main higher time frames. Now, if I go to maybe 4 hour time frame, I'm going to notice there's certain move the market is making that will be different from the lower time frame. Now, watch. This is like a high, entire this is the highest when the price has been to. What happened? It came back down. This is the lowest when it was, went back up. This is the highest when it was, came back down. This movement now, it took our liquidity above this high. Then what happened? It broke structure to the downside. This is a swing break of structure. Because we did that move now, there are other movement that happen. You can notice this other multiple movement, multiple buys, multiple sales that happen within that very swing movement. Now, if I zoom, you're going to notice what happened. It finally got here. What happened? It created this new swing high, came down, created this new swing low, went up, created this new swing high, came down again, just like that. If you notice, higher time frame move now, pretty large, taking days, taking weeks to actually complete the swing move. But now, the major difference, the major challenge with this is that you can't actually tell that this is a swing move or this is a swing point to get to. Let's use this as a practical example. With this sale that happened right here, with this sale that happened right here, price going down, selling all the way down to this very point, you can't tell if this is the actual swing point where the move, where the buy will start from. You can't actually tell. You can't tell if this is the lowest point it will be to. If it's currently selling from here, if it won't sell, then take at that point, get to another new low before buying, before moving the swing move to the upside. So nobody can tell. What I simply do regarding this swing structure, like I told you, we have the string and the internal structure. Let me mark them out and then show you what I do regarding the string structure. Since I can't tell where the string, notice what I mean by you can't tell. Price went up. I'm getting here. Nobody can tell that this is where BTC will sell from. Unless maybe I'm going to show you. Maybe it's a supply zone, which I'm going to talk about. On getting the chain of character is what to confirm that you reverse from there. Once you give the chain of character, that's confirm that there's a high chance that BTC will sell from there. I'm on BTC charts, you can do it on any market. So there's a high chance that if you sell from there, it gives that chain of character. Or you can't tell if this is where you get to without it giving that chain of character right there. Now, this is what the market structure is. Like I was saying, swing structure is the higher time frame move. Let's say price move from here to this very high, then come down to this very point. If it's going up now to take other high as a break of swing break of structure, it's gonna be forming some internal structure. It's gonna be forming some movement like this. It can even get to a point drop, push up again. Overall, what is it doing? It's going up to break that high. Then it's gonna get to a point, give a change of character, start dropping again. These are swing move. Let me show you an example. Give a change of character and then start buying again. Finally break that high. Now watch what I'm drawing right here. Now watch. This highest point it was is like a swing high. And if you watch, this was when the price broke that high. Like a swing break of structure. Then what happened? This is a swing low. This is very low right here. Price never came down to break that very low. Then what happened? It had this swing high. Then it has a break of structure as well, showing that this market is still bullish. Then it had this swing low because this is the lowest point before pushing up. Then this is where it's now got to again. It didn't come back down to break that very low. So if you watch, nobody can tell that this way to this is a final point to get to start dropping. You can't tell, right? You can't tell that this way to reverse from. But all you need to know is just this is a swing move on the market. Right now, within that swing move now you can catch multiple sales, you can catch sales along this move or catch buys along the move. So what I now do regarding this structure, this swing and internal structure, is that before I start any analysis, I tend to go to a higher time frame. Now, the higher time frame, I want to know and then see what the market is doing. I want to know what the higher picture is saying. And higher time frame, I do go to my 2 hour, 4 hour, and the daily time frame. And sometimes I do go to weekly. On this higher time frame, I want to mark out what this higher picture is saying. Let me use this BTC example and then show you guys with it. Now let's use as a practical example. On BTC right here, this was a sell, this is a sell I'm currently on. On BTC, if I go to a weekly time frame, I can notice this is like a weekly demand zone, a weekly buy zone. And if you watch closely, what did I just tell you? You can't tell where the swing point is gonna get to. This is like a swing high because this is the highest point it has been to. Then it's like a swing low. This is the lowest point it has been to. What happened? It got here. Nobody can tell you this was gonna be the swing high. If you say this was a swing high and what happened? It dropped. Then what happened? It went up again, created a new high. So you can't tell if this is a swing high or this is a swing low. But what happened? Immediately created that swing new high. That's where it started collapsing from. You can't tell that this way to get to and then create another new swing high. But all you can do is to, on this higher time frame, is to mark out major key levels, major buy or sell zones. Now, if you watch, this is a weekly time frame order block. I can mark out this order block right here. This is a zone I can expect price to come to and then buy from there. Then, if it starts selling, I can start looking out for sell. That sell I'm looking out for is now like internal structure, internal buy, internal trades, internal sales till it gets here. Then once it gets here, I can now watch out for reversal to confirm that this is a swing leg for it to buy. Now, I now know this is the point it's gonna get to. Then what did I do? I went to a lower time frame, which is now my entry time frame. But my entry time frame is always a 30 minutes, 15 minutes, 5 minutes sometimes. Those are my entry time frame. Now, my entry time frame, notice that sales are now start taking. The first sale was this very from this very order block. But now you should understand what order block are. But if you don't understand, you don't know what order block is, I'm gonna talk probably do a video on my next video will usually be on order block. So this is just on market structure. Notice I took my time to explain everything regarding market structure. I don't think I'll do a video like this again. So it's important to always go through the video to the end. I don't think I'll do a video on market structure again. Maybe on other things like order block, maybe mitigated block, breakout block, directional bias as well. So this is the liquidity that I added right here. And I took the sell, first sell, then this was another sell I took. This was a personal trade. This one added as a liquidity. Inducement liquidity, I took myself. Then this third one was sent out as a signal to the free Telegram as well. Like I said, the link will be in the description. It's 100% free and you can easily join. Then what happened? This I took as a liquidity. I took myself, giving 5 RR, pretty much solid good trade. And I took another trade right here, which was a loss. It didn't go well. But that trade was a break even. I guess I didn't lose money on that trade. Took a sell around here, which I had a break even on that very trade because it ran a profit before reversing. So pretty much this is everything you need to know about market structure. Charlie, I've given you guys this everything. So it's not gonna be you going over the video again, seeing for yourself what you're not understanding, trying to get hold of what you're not getting. Then as from my next video, I'll start maybe talk about other block or any other thing. So if this video was helpful, like the video, and if you wish to learn from me directly how I trade everything, I have a mentorship class where I teach students how to trade. Pretty much all my students they are doing well. Though not everyone is gonna win definitely, but most of them are doing well. Receiving payouts. If I check the Telegram now, I'm gonna notice that the recent payouts my students are receiving. This one is receiving payouts. This one are winning back to back. Try it. That's how it is. So the link is in the description to join. And if this video is helpful, like, subscribe, and drop a comment on what you think and what I should do next in my next video. So I'll see you guys in the very next video. So take care, guys.